So, hello everyone, and I hope you're all doing very well. So, I'm guessing you've all traded news and watched your positions get wiped out in seconds. You're not alone. I've also been there. News trading is one of the fastest ways to make money in the market, but it's also one of the fastest ways to get liquidated. So, in this video, I'm going to show you how to trade news without getting destroyed. Not just theory, real structure, real examples, and a clear system you can actually follow. So, first things first, news trading isn't about predicting the news. That's the first mistake people make. It's about understanding volatility, liquidity, and reaction, not the headline itself. And by the end of the video, you'll know when to trade news and when not to, how to avoid getting liquidated, and a simple framework you can use every single time. So why do people actually get liquidated? Let's start with this problem. So most traders get liquidated during news because they use too much leverage, enter before the news hits, or ignore the spread and spillage. So when big news drop, like interest rates or inflation, the market doesn't move smoothly. It spikes. Price can jump up and down and back again within seconds. So if your stop loss is tight and your leverage is high, you're gone before the real move even starts. So the goal is simple: survive the volatility first, profit second. So here's the system. Step 1, you don't trade the initial spike because the first 30 to 60 seconds is chaos. So just let it happen. Step 2, wait for direct confirmation. So after the spike, price usually picks a direction, and that is your signal. And now step 3, enter on the pullback. So instead of chasing, wait for a small retrace and then enter. Step 4, use lower leverage, cut your normal leverage in half because news is a higher risk. And then step 5 is a wider stop loss, but a smaller position. This is very key. So you're giving the trade room to breathe without risking your account. And now let's say inflation data comes out lower than expected. Price instantly spikes up. Most traders jump in there and then they get caught right at the pullback. So instead you wait. After about a minute, the price stabilizes and starts trending upward again. You enter on a small dip, not the spike, and ride the continuation. And that is controlled trading, not gambling. And now here's a perfect example of what we want. News drops, price spikes up aggressively, but instead of chasing it, we wait. You can see that after the spike, the price begins to pull back, then continues upward, and then that pullback is the safest entry. So you're not guessing, you're reacting to the market. And now we're going to talk about the opposite. So that is when a trader enters before the news, expecting the price to go up. So news drops and the price spikes down first. Boom, liquidated. Even if price later goes up, they're already out. So this is why predicting news is very dangerous and that the reaction matters much more. And now here we have an example. Might not be the best quality, but you can still see the structure and the candles and the whole setup. So this is actually what happens when you try to predict the news. So traders enter before the announcement thinking that they know the direction. Then the market spikes down first, wipes them out completely, and only after that the move comes back up. So that is how most people actually get liquidated. And now this one catches out of a lot. And now this one catches out a lot of people. So news drops and then the price spikes up. Everyone goes long and then suddenly reversal, hard drop. And what you'd call this would be a fake out. So if you waited instead of chasing, you would have seen the rejection and possibly even taken the short instead. So patience is literally your edge here. And now what we've got here is a fake out. So one of the most dangerous setups during news. Price explodes upward. Everyone jumps in, then a reversal hits hard. If you waited, you'd actually see the rejection and avoid the trap, or even trade in the opposite direction. And now, if you remember nothing else, remember this. Don't trade the first move. Never over leverage during news, wait for confirmation, and enter on pullbacks, not spikes. So, news trading isn't actually about being fast. It's about being disciplined under pressure. And if you can master that, you won't just avoid liquidation, you'll start using volatility to your advantage. So, if this helps you understand news trading better, make sure to stick around because mastering this skill can completely change your trading game. And now don't forget to check out the link in the description below for Evedex, a powerful platform for leveraged crypto trading. But always trade smart and manage your risk. As always, thank you for watching and I'll see you in the next one.